AFX. Okay, we'll take a look at AFX. There's two fans I use. So the first fan is called the speed fan. Fibonacci speed resistant fan. You draw this pretty much the same way you draw a fib retracement, right? So that is just a fib retracement tool. So you have a high, you have a low. Pretty much you just do that, right? So this is a very kind of rough way to explain it. But that's usually what I do for the fans that we use. And then there's another fan. It's called the pitch fan. So this is more like the extension. So this is where you need to find a clear trend. So in this case will be 1, 2, 3, right? The triangle point. So here's 1, 2, 3. Do you see the trend right here? So you use the speed fan. This is a bear trend. So then you would draw it just like this. And obviously I can't share the setting for these things because they are proprietary, meaning that, only my students will get to be able to see these. But you can see how they're really being respected, right? And currently we're kind of in the middle of the range. That's why I'm saying, like, if it does break out, the most immediate place is gonna be able to break out to is at least here. And if it continues to break out, it'll probably hit something like this too. So we have really two TP levels. You can really use this for TP, right? So TP1, TP2, depends on if it breaks this and goes down, and then TP3, obviously down here. So you can kind of use fan to get an idea about, how to TP this thing. Does that answer your question, David? Or am I too fast? I didn't mean to be too fast, by the way. I just been using them every day, so I'm very familiar with them. So you good? Okay. I mean, we're playing Diablo anyways, so if you have a question, you can always ask me later. All right, Colonel AVEX. In spot, average entry is 40. Sherlock call. Colonel, can you give me the context of your question? I'm not sure what you want to know about AVEX. Briefly talk about DCA leverage trading. Yeah, we can look at high. DCA. Okay, well, since it's all DCA questions, let's just use AVEX. Let me set alert first, yeah? So if I close below here, I want to know. Let me click the line, please. Here we go. Add alert. BTC major MSP breakout. Check price. Okay, per bar close, crossing down, create. Perfect. Oh, it's happening. Hold on, you guys. I'm gonna put your questions on hold because potentially it is happening right now. Hang on, guys. All right, so MACD looks good. We have growing momentum, huge volume. I'm entering 2 right here. So the volume is already there. It's increasing. You don't have to enter with me. You can wait for confirmation because I can be wrong, This is a typical potential fake out, right? So I don't know if you should go short yet. This is a bad example of what not to do. I just jumped in because I got too excited about the volume just skyrocketing. But we'll see. So a couple of reasons why I am currently kind of bearish, right? So one is we're creating a order block here. That's a bear order block. Bear, bear, bear. So we create a lot of bear order blocks. Obviously, the overall direction, has been kind of downtrending, right? So we also have that. And for me, I can simply take my TP down by the Fibonacci line. So even if it wants to just wick it, it will still be profitable. I can potentially DCA up here to potentially get myself out of trouble. So I can DCA 1 unit just up here. So I know there's a order block, so you'll probably react here, right? And then it will probably move my, uh, it will definitely move my entry kind of somewhere in between. So if I added 2 here, it would be in the middle. If I added only 5% up, meaning I can literally kind of have my take profit break even if I want to, or maybe a little bit at the bottom of the brown box. So this is a major swing point. By kind of continuing what I was telling you earlier, Colonel, you see how it reacted right off the swing point. So when I jumped the gun, I was kind of, blinded by the volume increasing. So I shouldn't have jumped the gun, right? But overall, I'm feeling it's pretty bearish. The worst case scenario is what it's going to do. The worst case scenario is it's going to go back up, and then from there, probably try again. This is the worst case scenario. As long as this trend line continues, and the trend line I'm talking about is here. As long as this trend line continues, you guys see my circle, right? Then we're absolutely bear. The only time is when we break above this trend line. That's when we start looking at potentially going to bull, right? But not only break the trend line, we also have to break the change of character, right? So the change of major character is actually up here. That's the major character. If we're looking for a local character, it's probably here. So this is kind of like the local character. CHO. So the price has to actually climb above here. And then the question is, well, that the fib doesn't work all the way up there. So we need to then move the fib to here, right? So we need to have a complete new set of fibs. But if we're only looking at this local area, the change of character is actually here then, right? So if the price is able to break out of this current trend line, and then you see how many more trend line it has to break in order to get to here. It has to break this, potentially break this, and then reject off this or break this. So there's 1, 2, 3, 4. There's 4 different trend lines it has to break in order to change character into bullish. That's another reason why I think, going bear here is not a bad idea. However, this wick again shows me that is pretty bearish, right? You guys see the God wick? This long ass wick is a bear wick, right? So I'm thinking it's gonna go down pretty soon. Colonel, you should take profit conservatively, 63,320. Probably no more than that. If you just kind of want to win small, right? Remember, scalp is not just about kind of setting this up and trying to take profit all the way down here with 2 BTC, making 2 grand, right? I mean, can it go down that far? Sure. But would it really do that quickly without, you missing out all the profit? It's hard to say, right? So we take what we can get. So the way you take profit is you line up your candle with the trend line, right? So right now, this is where the trend line is. So I can even pull this down slightly. You see I'm lining up my cross right here. Colonel, do you see this? Right? So then that's kind of basing on this 5-minute candle. If it wants to have a God candle come down, it will hit my TP right here. Or the next one, it will still hit my TP right here. The next one then will hit my TP. So the longer this drags, the more profit I'm in. Do you kind of see what I'm saying, Colonel? Right? So, and by the way, you guys, I'm not ignoring the rest of you. Just Colonel is my pay student, right? So I'm kind of talking to him right now. But as we're coming down. Okay, but I don't like this wig. However, this could just be the liquidity here fighting. Again, we're looking at momentum, we're looking at volume, right? So what's good is if we can engulf the previous wick and kind of blow through this liquidity to confirm that this breakout is real. So that's kind of what you like this is exactly what you wanted to see. But we don't want to see a kickback. Okay, so I will still answer you guys' question. Just right now we're in the middle of a trade, so let me kind of finish this thought. Because if we want to close break even, or if you want to kind of go back on our decision, this is the time to kind of make a decision. I'm probably not going to go back on my decision. The worst case scenario is just I'm going to DCA up here at this order block. I can also be a little bit more conservative and move my order block up, depends on the momentum of this blue candle. So let's kind of check out what it wants to do. That's a big blue. Let's see if we can print yet another nice down wick, or, you know, bear wick. If it goes the wrong direction, then we go back to management. So you have two options, Colonel. You can take a DCA up here at the order block, or you can take the DCA up here by the top. If you do it at the top, then you're basically enlarging the amount DCA here. Then the price will only move, you know, very, very briefly. Hold on. In this case, the average will only go up to about the midpoint of the brown box. But if you move the DCA to then the top of this trend line, then the average will actually move to the top of the brown box, right? So, and that's with 1-to-2 ratio, right? So I'm DCA half position of what I currently have. So it's a good, this is a simple setting, right? So you just find a fib retracement tool and you just basically choose, you know, 0.25, 0.75. So you have the basic percentages to kind of help you determine where your DCA is going to land, right? This is also answering your question, Derek. Sometimes when you're looking at DCA, well, not necessarily answering your question. When you're doing spot, it's a little bit different. But when you're doing scalp and you're doing futures trading, and you're kind of determining where your average entry would move to, this is a great tool to have. If you're using whole numbers, right? It's very simple and easy calculation. All right, since the price is just kind of doing its thing right here, I am going to move on. Going back to the questions then. Okay. DCA in leverage trading. And then I'll get to AVAX next. So when you're looking at DCA in average trading, Derek, what are you talking about? Are you talking about how do I DCA? Are you talking about, like, can you give me a little bit more context? How do you DCA? Okay. So you DCA at points where you deem is reactable, right? So a simple concept of that, oops. So a simple concept, I wanted to take out the line, let's see. Path. There you go. Okay, so a simple concept to that is if you, let's say if you went long here, FTM. Oh, so you want me to just use FTM then? Yeah, that's fine. We can probably just use FTM. FTM. So give me your average entry or your current entry. 0. 0.6616. Okay. So let's, wow. Okay. So let's say you entered here. So this is a 4-hour. That's why I wowed, because that's a pretty far down. Right. That's like 28% down. This is future, right? You have an old screenshot, I presume. Yeah, your mark price is only 58 cents. Right now the Oh, it is? Oh no, it's the current price. Okay, so we didn't see it when it's at the lowest. Okay. Yeah, so you DCA wouldn't make sense, right? So whenever you're in a trade, you want to go back to the previous times. And Colonel, this is for you too, it's very important. Whenever you are in a trade, you want to go back to the previous history. And then you want to look for potential points of reaction, right? Like what do you notice literally in this space right here? Can someone share? Like David, what do you see? Like something that should just pop right out. There is a pattern here. Something that just literally soar to your eyes. Let me kind of zoom in on it. Do you see what I see, David? I hope you do. We've been talking about this for so long. Do you see anything, Colonel? What's the plus? Oh, okay. Yeah, even Melts see it, right? You see the crazy wicks? So these three are the crazy wicks, right? So if you kind of just move them, and then you're asking, well, when should I DCA? There's a couple way you can do them. You probably don't want to do zones because it's too wide. But what you can certainly do is you can do lines. Right? So you have these three lines. So then when you go back in, is it not surprising that this line exactly DCA'd at the bottom? This is no magic, you guys. This is math. Derek, did I answer your question? Like literally exactly, right? 0.4751. This candle, the low was 0.4732. Literally. Does that answer your question about DCA? You look for patterns, right? You look for historic information that would suggest a point of interest. Um, then your question is not the location of DCA, is the management of your portfolio, right? That's the second question, I assume. In that case, it really depends on your portfolio, right? So let's say if this is your original entry, if you haven't had stop loss yet, you know, your trade must look something enormous like this. Right? This is a typical swing trade. I'm normally, not a fan of these type of trades because they take forever to play out. But if this was the case, then let's say your entry is $50 or $100, depends on your portfolio size. Typically, what you want is you want the DCA to increasingly be larger than your margin. That is one strategy. So then you would enter small. So then you potentially would do this, right? You would enter, let's say your total budget is 200 bucks. Okay. So you probably enter $30, very small. Your first DCA, let's say, is 40. Your second DCA is, let's say, 50. And then your third DCA is like 60, or in that case, is probably 80. Right? So you have your entry, 40, 50, 80. Right? So entry, 40, 50, 80. So that's one strategy. So what that will do is that will probably lower your average entry the most because you're increasing your position size as you go down. Therefore, even if you were to just go back to break even, this is still let's say a 2 RR trade, right? So it's still kind of like decent. The problem with this is if you hit stop loss, this also hurts, right? Because you're literally barely before the stop loss, you spend the most money. So there's risk involved in this, right? So you have to kind of decide whether or not this risk reward is to your liking. You can do that. Another strategy is just even all the way 20, 20, 20, 20, right? Or, 50, 50, 50, 50. You can also do that for the $200 budget. It's up to you. So there's no like the right way to do DCA, right? In terms of portfolio risk management and all that is completely up to your own appetite. Does that make sense, Derek? Or did I answer your question? Okay, so this is a rebound, right? So it completely rebound. This could potentially be a double bottom, but you see how it literally hit the order block kernel and then it started reversing. So we could totally have actually added there, and that would have put our entry probably around the midline. So if we want to kind of like break even, we have a much easier time doing that. But the reason why I have this up here is because our stream is only halfway done. So you can see, even by drawing a trend line by hand, we still haven't really contested this trend line, right? So it's still ranging and compressing into this triangle. So the triangle that I see kind of looks like this, right? Do you see it, Colonel? So eventually two things will happen. First of all, I'm pretty sure the price will get compressed down again. So there's always a chance to kind of get out. Again, I want to kind of make the statement undeniably clear. I jumped into this trade out of complete impulse, which is not what you should do, right? So this is me screwing up. So because I saw the volume, I saw basically the candle, I was pretty excited about the breakout. I thought I was going to break out of this brown box. This is me making a mistake. We would normally not trade like this. We will wait for the confirmation, right? When I see the 2-wick, I knew it was going to rebound, right? But anyway, so please don't do that. That's a bad example of what not to do. But anyway, as we compress, I have every reason to believe that you will eventually kind of get back down to where we are. And if it does, we will go ahead and kind of break even and then wait for the actual breakout to happen, right? So the actual breakout can happen either here or here, right? As it kind of continues to, kind of swing back and forth. Eventually, it will have to break out somewhat. And that's when we wait for the confirmations to really go after. Hopefully that makes sense. Okay, cool. Now let's look at AFEX. Yeah, well, we see double bottom. And you see how we have formed an order block here? Remember, I just literally told you when we have order block formed right by the MSB, it's a super block, right? It's a pretty significant block, right? So you see how we 1 block, 2 block, 3 block. it just always like keep on forming blocks literally right at this major level, right? So I have to respect this level, So we, instead of guessing, because you're literally guessing whether it's going to break through, what we don't want to do is guess. We want to do is witness, right? So we want to see it close below, accumulate, retest, do its thing, and then go down some more. That's really what we want to see. But if this trend continues, right, then potentially what likely will happen is we will also potentially get a breakdown. Another thing you can look at is look at the overall scope of the market. If everything is red, and potentially you can think the price can break down more. BTC is directly correlated to USDT dominance, so you can also take a look at dominance and trying to see what dominance is trying to do. You can see the dominance is kind of going at a pretty hard uptrend. Doing the same exact analysis, you can kind of draw the fit fan, which I did earlier too. And you can see that it's kind of been following this trend line. If you draw a manual trend line, we have a line that kind of looks like this too, right? So it's been kind of respecting this line as well. So even if it does want to come down a bit, every reason to believe that it's probably going to bounce and then maybe hit the previous swing high again. This is certainly a swing high, right? So at this swing high, we will have to see if it wants to break above or then rebound again. If it comes down, then we will pump, BTC will go up. If it breaks above, then BTC will dump, which then confluences with our current trade of short. So that's kind of like how you would get a confirmation about your decision. You can always, especially when you trade BTC, you can always go back to USDT.dominance and to kind of see if you have any reason to believe that is going to go up and break, especially this order block at the swing high as well. Do you follow what I'm saying, Colonel? With, absolute understanding, clear understanding? Okay, very good. So I'm going to show you additional tools that can help you kind of determine this whole thing, right? So of course, we also have the order block down here as well. That kind of matches with the trend line. So we really kind of want to see. So the price is about to pump again because it's about to hit this order block. And once it does hit the order block, this is our opportunity to either break even, just to kind of get out of the trade right now. This will probably happen in the next few moments, as is already happening right now, right? So then what you can do is you can DCA really quick, DCA 1, to try to get your break even closer to the top of the order block, or you can simply move your TP to the bottom of this and just trying to get out. And you want to calculate your fees, right? So I've already paid about $6 in fees. So twice that is $12, $13. This is 22. So if it hits it, it's an actual break even. So you kind of want to consider that as well. All right, let me go take a look at AFEX. Let's see. AFEX. I don't have it here. All right, Colonel, let's take a look at your AFEX. Ah, choppy. So what do you have? Let's see. You entered at 40. And this is a spot call, right? So here's your entry. I mean, yeah, you would certainly DCA. I don't see why not. If you believe in the project, I just want to be clear. When you do spot, this is investment. This is not trading. So you would not actually be doing too much buying and selling. One of the concept is this, right? So we can see clearly that we have visited back down to kind of like this zone. So again, if you draw the structure, and this is a 4-hour, right? So it's a significant structure. So we have a top, we have a low, again, we have a top, we have a low, we have a top. And this is the first time we have some sort of a change of character, right? Because this was our MSP and it was broken, right? So we did close below here, but then we kind of working our way back up again. So this is literally the point where we would have DCA'd, but this could also be the point of reversal, right? So we want to be careful here because if we kind of retested this change of character successfully, that means we can potentially form a lower low, right? So the first thing is going to form a lower high, in which case this was the previous high right here at this tiny peak. So that means it's probably going to be somewhere down here. So this is where you use your Fibonacci tool. You kind of draw this out using the OEM. So then you can kind of check this out and see. Right now we're reacting off 236 exactly. Do you see that, Colonel? We're reacting exactly off 236, right? And if I kind of move that clearly, right? So it's literally to the T if we're just using bodies. So potentially what it can do is further correction to create that, lower high. This is the previous lower high, remember? Right, that's where it was. So this is probably what is going to happen. But will it happen? I don't know. Because potentially we can also break above the previous this one and change of character into the bull run again. Like you can certainly do that. So then what exactly am I saying? What I'm saying is you should probably set an alert right around this level, and you can add this alert as in check price or AVAX. You can say check price and see if price is going to break out, right? So you can always use alerts to kind of remind you, and you can kind of draw your structure out so the next time you look at it, you know exactly what it's doing. However, the reason why I had to mention that this, when you do spot, is investment, is because there's nothing wrong with buying it at any of these points. Because the goal for spot is that one day it's going to go back to the all-time high, which between the current price to the all-time high is about 367%. Like you're not wrong either way. Even if you go to your entry, it is still a 221% gain. There's nothing wrong with this. Make sense? So when you're investing, you have a different mindset. When you're trading, you have a different mindset. Hopefully that makes sense. Did I answer your question, Colonel? Okay, good. Finally, you not like very clearly, but you kind of have a range, right between here. So this could also be a deviation instead of a change of character, right? So anytime when we have a deviation is when we have a fail retest. So that also means it's supposed to go back up. That's why I said, this point is very likely because this looks more like a deviation and it can potentially shoot up to here. So that's my thought on AVAX. Hopefully that has been helpful. All right, cool. Coming back here, how are we doing? So it got pretty close. And then you see the wick is pretty obviously showing you the compression, right? So we have push, we have pull, we have pretty much on both sides. So as we're kind of compressing down to the last few rooms that we have in the triangle, I'll probably stay on this instead of answering more questions. So let's see what it wants to do. Go to 1 minute. Okay, so that is not an order block, nor is this. Sometimes we can look at divergences. See how this peak versus this peak is kind of like equal, but the price is lower. And then this peak, so far, is still confluence. It's not divergence. It's convergence. I mean, we'll see. I have a feeling we'll at least visit the bottom of the brown again, though. Yeah, I'm just trying to get out break even right now. Well, yeah, in 45 minutes that might happen. Sure. You see how funny my TP actually sits exactly on the top of that order block? I set up the TP at 5 minutes, but on 1 minute chart, it's exactly at the order block. So sometimes you see them kind of forming. It's interesting to see. All right, anyway, let's take a look at how this is going to play out. Good momentum coming down. Okay, it's probably going to hit. reacting right at MSP. Okay, coming down some more. $45, 73. I mean, the momentum's good. I don't really want to pull it right here just because the volume is increasing. The bar still shows that the seller is winning, right? The volume delta. But we certainly have liquidity here, you know? Ideally, when we trade 1-minute charts, we would have DC8 up here instead of waiting for the breakout. So when we trade the 5-minute, that's more. Yeah, good job, David. Because we set up the trade for more of a 5-minute compared to the 1-minute. Yeah, waiting for the breakout is definitely a better decision in my opinion. So what happened earlier is definitely ego in play. So just me with the wrong expectations. So I always got to remind yourself to stay cool. Keep cool. Annoying wicks though. So I'm just gonna get out here, taking a small loss, $100 some. Instead, I'm going up, going long, and I'll probably get out as we reverse. So I'm just gonna trade within this range, just very small positions. I'll add, you know, I'll add positions as we kind of come down in. One-minute trading is always interesting. Okay, bull in full force. Let's see how far it's gonna go. Or down. One thing about, doing 1-minute scalping is you gotta get used to the movements. It's gonna move up and down. You're gonna have days where, you kind of miss a move. You're gonna have days where you gotta make a quick move. Like if we all of a sudden have a God candle, I'll be closing. I don't care if I lose a couple $100. I'll just close it. So instead of losing like thousands, I'm much more happy just losing a little bit. Yeah, we can that's why I said earlier the jump in was pure ego. We should have waited because when I see the double wick, like every part of me is just knowing this is gonna go up. What do you mean you about me, Colonel? I don't understand. $1,000, yeah. Well, when you're doing 1-minute trades, there's a little bit of liquidity here, so we might see a reaction. So currently I'm looking at volume to see the color of the blue and whites. I'm looking at the momentum. So far it's still healthy ball. Doesn't look exhausted yet. My TP is at the top here. Hands on the trigger. So that was a good decision to just get out then, right? I'm out because of decreasing bull volume. So right now I'm literally $38 down. Okay, the bull volume actually increased, so that's okay. But my original TP was pretty close anyway. It was at the top of the swing high. Okay, so my TP would have hit. I'm waiting for a reaction here to either long or short, depends on if it break out or reject. Great volume. So I'm waiting patiently. It looks more like a rejection. Let's wait for this candle to complete before we call it. If it deviates, we will short. This is not one of those God candles. The volume is decreasing, so I don't think this is a breakout candle. So my guess is we will probably come back down. I can be wrong again. Are we hitting something? It's kind of like an order block, not really. So I am shorting here. This is probably a reaction of the follow-up buying because a lot of people are buying based on this candle. So it depends on which pressure is harder. The liquidity is harder or the buying pressure is harder. We have inconsistent buying here though, right? So I think the liquidity up here is probably going to be more significant. Again, I could be wrong, but we'll see. Momentum seems to be shrinking a little bit. No TP yet. But if I were to take TP, it's probably going to be right around here at about 63,615. Okay, so this seems like more of a breakout here. Again, the volume is not growing entirely. So yeah, even though, the momentum looks hot, but you can always determine by the volume to see whether or not it's going to be a real breakout or not. Let me see if I can do a better trend line here. Yeah, this seems to be a more of a proper trend line. Yeah, make sure your trend line is drawn correctly, yeah? So this is more of a proper trend line. I was like, what the hell is happening here? So we never really broke out. This makes a lot more sense to me. If we start falling, I'm adding one more position. I'm adding one extra position, taking profit down at this level. Reason adding long wicks up engulfed the previous down wick, so we have a lot of room to drop. And we also deviated. So all these are signs of being, being bearish. And of course it reverses. That's annoying. So what you're just seeing and experience is what we called a bear trap. Accumulation is consolidation, Colonel. They're the same things. We do have 3 increasing selling candle and a much smaller volume on this one. So I still feel like the price is probably going to come down, to be honest. Another long wick up too. Very choppy. It is consolidating at the line. It's being pushed down every single time. Yeah. Another long wick down. And the momentum is dying, so the bull is tired. It's hard for me to imagine that we'll just keep doing this for the next few candles. Based on analysis, I think a bear is imminent. You guys see the volume coming down, right? And out of these couple of candles, volume candles, they're all bearish. So I'm not sure why the price keeps on going up. It probably shouldn't go up. Ranging, accumulation, and consolidation are talking about the same things, just different ways people say it, Colonel. So this is a range. This is consolidation, accumulation. I think consolidation, accumulation is used in different strategy terms as well. But they're pretty much describing the same phenomenon, the same things. Just think in a overall bearish market, going short wouldn't be a bad idea. Yeah, so I don't think this is wrong. What we can potentially do is to draw a reverse fib line. This is good. I'll probably do this one right here. I'll go over what this means later on in our class, Colonel. So we're looking for intersections. So we're literally using this line as kind of like a additional confirmation about whether or not the breakout is going to happen. So we haven't been able to kind of break above it. Even if we do, we have, a pretty solid rejection point here. So that's a good point of DCA. Okay, here's the volume momentum. Not very strong. You see how the MACD momentum is just kind of slowing down? What you're witnessing, I mean, in my opinion, is probably absorption. So there's a pretty big liquidity block up here. It's just absorbing all of the bullish momentum, right? That's why you see all these long wigs being pushed down. And all of these price action are being done by the buyer who's excited about this bull run. But then there's so much orders up here waiting to sell. There's not enough orders of buying to push through. That's why we haven't had a long breakout. But we also haven't had a return. It's because there's still remaining momentum. So then right now the question is, are we going to have more momentum or are we going to have more liquidity? That's always the question. So that's what you'll be able to find out through price action. You're welcome, man. See you next time. Okay, so this is kind of more like what I was looking forward to see. Not really gonna add another position. Don't want to get greedy. I mean, this entry point is still not horrible. Considering if this was the stop loss, this was the TP, you're still looking at roughly about a 2-hour trade. In fact, 1.5 is actually good enough. So in that case, 1.5 would put us like literally right here, right? So if we want to be conservative, we can take TP like right here for a 1.5 trade. Okay. As this trade commence, either way, we're going to end the session quite soon here. We'll wait for either break even or we'll wait for some sort of breakout momentum. It should come down. The long wick shows that the selling pressure went from the liquidity block to now selling pressure. So that's usually when the price pushing will start happening. Did you understand what I said there, Colonel? I'll go back and review that. Okay. All right, I'm out here. You can probably stay in. I mean, you'll probably hit this, but you see how at 1.5 exactly, Colonel, that this trade completed. Remember my trade setup was 1.5, I told you? I forgot where the entry was, but I remember where the TP was. TP was literally right here. So that's exactly where it was. I didn't want to have to gamble and to put myself in, unnecessary risk to potentially have a rebound here. So I'm out. Are you still in, Colonel? You're welcome, David. For the guys who have no idea what the hell we're doing, we've been doing this every single day, and David has been milking this for a long time, right? Alongside with some other people who are the regulars of my live streams for daily scalping. So this is actually not difficult to follow if you understand how to do market trades on Mexi, and this will probably only make sense on Mexi because of fees. But yeah, we do. I know, David. You know, I'm teasing you. Yeah, me and David is good friends. We play Diablo together, play games together, so we talk shit. So yeah, this is something that's likely it'll probably drop some more. It may or may not do it. We'll see. But I'm out just simply because I'm not greedy. I'm not trying to get the maximum. I'm just trying to kind of get what I want. All right, so Colonel, let me go back to the thought. All right, so it's very important for you to understand liquidity versus momentum pushing. Okay, and for the rest of you, this is literally my pay class, and thanks to Colonel, you guys are hearing this in the public. So you see how all these crazy wicks are happening here? This is what we call the liquidity block. So imagine the price had to work its way up to this point to then react towards this block of liquidity, right? So it's been reacting and it's been trying to push and push and back and push and back and push and back and push and back, right? So repeated action. That's why I said it's absorption, right? What is it absorbing really? it is absorbing all of the momentum that this bull carried. So far, do you understand what I'm saying, Colonel? It is absorbing all the momentum forces, right, by this block. Think of this block as a line of defense. And your soldier is marching forward. You have a lot of soldier marching forward. But the line of defense is so strong, right? The soldier is not able to breach the defense. Does that make better sense for you? Okay. So then eventually the defense becomes the offense, right? Because then they see the defense the original bull is now weakened. So then this wick right here is indication that the defense and the offense has switched. So we're no longer passively waiting at the block. We're now coming down, right? The defendant is now advancing to the opposite direction based on this wick. That's why I knew this candle we're gonna march forward. Do you kind of see my logic there? And what we're doing here is now we're now at the bull's defense fortress, right? So this was the bull advancing, hit the the defense zone of the bear, and the bear started pushing back, and now the bull is defending, and now the bull is pushing up on the super block. Exactly. 10-4? Okay, very cool. So hopefully it's been kind of valuable to you guys. I mean, obviously we can do this all day, literally. But I'm a little tired and I like to get back to my Diablo. Any questions before I end the trade today? I mean, I end the session today. Any questions? Anything you want me to cover? I probably have a few more minutes of me left. Yeah, cool. Appreciate it, Colonel. I thought the plus is, 10-4. But anyways. Yes, sir, it's good. All right, you see the wicks? Here is showing that the defense is being breached by the bear. So we're probably going to hit the next block, which is probably down here. That is also my original TP. So defense is giving its last push. And the way you see whether the defense is still holding is you look at volume and you look at momentum. What does setting kernel position mean? I'm not sure I understand that terminology. Meaning you're officially kernel or you have to leave the kernel position? I'm not sure what that means. David, you got crazy memes. Lieutenant Colonel, okay? So, as I'm waiting for Colonel to type. When you see crazy action like this, don't enter. This is where either way is possible, right? Oh, you're almost Colonel. Got it. So Colonel Sergio is just a name for yourself, but you're not quite that rank yet. But you will be soon. Is that what you're saying? Okay. I mean, I still like to call you Colonel. I think you're a good person. You're probably a good leader. All right. Anyways, guys, I don't see any questions, so we will. Blaze motherfucker. Got your Colonel here.